We're diving into some of the most exciting stock market opportunities in the remainder of 2024. I'm going to walk you through 5 compelling stocks that have caught my attention. I'll break each of them down and why they are worth a spot on your watch list. First up, we've got eBay, ticker EBAY. This e-commerce pioneer has been quietly making some impressive moves this year. With a market cap of $32 billion, eBay might not be the biggest player out there in the land of tech giants, but it's definitely not one to overlook. From 2009 to 2021, the stock climbed an impressive 1,840%. But like any stock, it's had its ups and downs. October 2021 to October 2022 saw a 56% decline, which would have shed some of the more cautious investors. Since that low of 2022, eBay has been working its way slowly back up. And for those who aren't watching, this will be one of those stocks that goes under the radar and runs away from you. It's criminal to let that happen if you consider yourself an investor. Stock picking forms the spine of a solid portfolio. From October 2022 to February 2023, eBay bounced back with a 45% climb. Then it went into a consolidation phase, forming a base until February 2024. Now, what happens next is where we start getting seriously interested as technical analysts. In March 2024, eBay broke out of that base, the first sign of the start of an uptrend, and when we entered our first position. And eBay has since climbed about 26%, setting new highs for 2024. eBay has continued to perform well since we last covered it. Now, a point to note is that eBay still has around 23% worth of room to trend before hitting its current all-time high. And if it breaks through that, we could be looking at a target of $100 per share. That's the kind of potential that makes eBay a stock to watch closely through the rest of 2024. Moving on to our second stock, Apple, ticker AAPL. Now, I know what you're thinking. Everyone knows about Apple, and you're right, it's a darling of the media, but often people can do better when it comes to investing in the stock. Apple is the godfather of stocks. It is the world's most valuable company with a market cap of $3.5 trillion. Let's look at Apple's recent performance. From 2019 to its 2022 high, the stock climbed 415%. It's this steady, strong performance that has made Apple a favorite amongst investors. After every big move, a stock consolidates. This is natural behavior. From January 22 to May 2024, Apple remained in a sideways market, forming an odd cup and handle formation. Then in June 2024, we had the breakout from consolidation. The stock climbed 19% to reach a new all-time high of around $237. Apple then struggled like the rest of big tech during the correction of July and August this year, caused by a difficult earnings window. Apple declined by 17%, but the bulls just weren't having it. The stock quickly recovered, climbing back up by 19%. Since then, Apple has been in a tight consolidation. This base formation is a positive sign, potentially setting up the next leg up. What we're looking for now is for Apple to break and close above the current all-time high. If that happens, we could be looking at a target of $500 per share at $100 intervals over the next 12 to 18 months. Now, let's talk about a stock that if it had a voice and an ego would go on live TV and share its disgust at the lack of media attention around its amazing performance this year. The stock in question is Vistra Corp, ticker VST. This is a stock that has been flying under the radar since last year and is actually the best performing stock in the S&P 500 so far in 2024, pushing Nvidia into second place, something few people are aware of. We have known about this stock and have been sharing it with our community members since last year. As an investor, there cannot be any excuses for not knowing this stock. When a stock like this eventually hits the news, you have to see the hype and sudden interest as being late to the party. Vistra has a market cap of $44 billion, making it the 471st most valuable company globally. But don't let that ranking fool you. This stock has been on fire. After remaining in consolidation from its IPO in 2017 until June 2023, Vistra broke out in July 2023. Its first major uptrend from July 2023 to May 2024 saw a climb of around 275%. It's this first uptrend that the early IPO investors are waiting for, and if the company is solid, they are eventually rewarded. After that impressive run, Vistra went into a sideways market for about 4 months. But in September 2024, we saw another breakout. and since then it's climbed around 17%. Now, here's where we need to be cautious. As Vistra has just broken out from a lengthy consolidation period, we want to see a pullback and then another breakout before considering positions. Why the caution? Well, after a long period of consolidation, there's always the risk of a fake breakout, a move back into consolidation. So patience is key here, but definitely keep Vistra on your watch list. It's been the best performing stock so far in 2024 in the S&P 500, and the next setup could present an entry into the next major uptrend. Fourth on our list is a company that's become a household name, Meta Platforms, formerly known as Facebook. Meta has a market cap of $1.5 trillion, making it the world's 7th most valuable company. And it seems to have put its troubles firmly in the past, with record highs in recent days, making investors very happy. After an uber difficult 2022, when Meta declined by around 80%, it found a new lease of life and has not looked back. Between the low of 2022 and April 2024, the stock climbed over 550%. It then remained in a sideways market until August 2024, dealing with two challenging earnings windows, but still holding within the consolidation. The breakout came in September, and since then, Meta has climbed 10% and is close to tagging $600 per share. What's particularly bullish about Meta's chart is that it has stayed in this base for 4 months without breaking to the downside towards $300. This is a strong sign that the market wants to push the stock higher. If we see a move through $600 combined with this solid base, Meta could potentially target $1,000 per share over the next 12 to 18 months. Long-term investors will be very happy that 2022 is firmly in the rearview mirror. Last but certainly not least, MasterCard, ticker MA. With a market cap of $458 billion, MasterCard is the 21st most valuable company in the world. Looking at the most recent major trend from September 2016 to February 2020, MasterCard climbed 240%. Then it entered a 3.5-year consolidation, initially triggered by the 42% decline caused by the COVID-19 pandemic. MasterCard eventually broke out in August 2023, climbed around 20% before moving back into consolidation from March 2024 to August 2024. Then in September, we saw another breakout. The stock climbed 2.5% before finding resistance at the $500 round number. Currently, MasterCard is stuck between $500 as resistance and the high of the recent consolidation base as support. What we're looking for now is a clear move to the upside with a break and close above the current all-time high set in September. If we see that, it could signal the start of the next uptrend, potentially targeting $1,000 per share at $100 increments over the next 12 to 18 plus months. Successful investing is first about picking the right stocks by understanding market trends and recognizing patterns. It is then about having the skills to execute a strategy, managing risk, and maximizing gains. Vistra has taken the #1 spot, but Nvidia will likely respond given their strong growth over the years. Watch this video to see if Nvidia can reclaim that top position.